Hello, everyone, and welcome to our latest Southern California housing market update video. This is for February 16th, 2021. My name is Stephen Mead. I'm the broker and owner here at Domicile real estate for people who love houses. And this week, we are going to dive into our Southern California market stats, which are based on Orange and Los Angeles counties. And we're going to dive in and see why is the market sending such turbulent, sort of mixed signals. It's kind of an interesting week. Some of my predictions are turning out to come true, others not so much. So without further ado, we're going to dive in and we're going to see how can you take this information and take action. So join me on the journey. Here we go. Buckle your seatbelt. Starting off with our first graph here, total active listings. And this is, again, if you watch our podcast and our videos pretty regularly, you know that we divide our market really into kind of two market levels for most of our stats, under 1 million and 1 to 2 million. Why do we do that? Because sometimes these markets tend to move in different directions. Their buyers have different employment in these two price ranges. Sometimes this gives us kind of an idea of geography, right? Like under 1 million is going to be more in some outlying areas and incorporate more of that data. 1 to 2 million is going to be more central Los Angeles, central Orange County areas. So we divide this into two. And if you look here, what strikes me about this is just how steady our total active listings are, right? And if you look, last week I talked about just a little bit of good news in the under $1 million front, a very slight rise. And then this week we had a very slight drop in total active listings. If you look down here in our 1 to 2 million category, just this very, very gentle downward slope. If you are a buyer, neither of these is really particularly good news for you. Last week, I think we noted that the trend kind of reversed. We thought maybe that level of inventory was going to start going up, but it just isn't happening in either of our price categories. There is just not a whole lot of movement on the amount of inventory in our market. But it's not all bad news. And there's a couple of reasons why it's not all bad news. If we look here to our 14-day new listings, right? And we're going to divide this into our two price categories, our under 1 million in the blue and our 1 to 2 million in the red. If you look at this here, starting from sort of like, this is right around New Year's, right through here, you see that, overall, these numbers are getting better. Like we are seeing more and more sellers put their homes on the market. It was pretty flat this week, but I mean, overall, these levels are elevating, right? They're not going down, which we saw at this point here, which was very disparaging, but these are growing in a very steady manner. I think a lot of us are sort of waiting for that other shoe to drop, so to speak. We're waiting for that moment where there's like this jump in inventory, and it just really hasn't happened. And here we are halfway through the month of February, and I would have expected to really see sort of stronger spring home buying season, sort of sellers putting their homes in the market, and it just hasn't happened. If we look here at our new escrows, though, this is the one place where maybe there's a little bit of a bright spot for entry-level home buyers. Speaking of which, if you do not watch our entry-level home buyer weekly market video, you'll definitely want to check that out on Fridays. It is on our YouTube channel. We also post it to Facebook. If you look here in our under 1 million, we actually see that 14-day new escrows dropped very, very slightly. I mean, we're talking like 1 percentage point drop here. Continues to rise here for our 1 to 2 million. But what fascinates me about that is that shows a sign that, maybe buyer demand is leveling off a bit, right? Like we kind of this bump as we came in to the new year, and it's just basically leveling off. It's not continuing to rise. That at least gives you, if you're a buyer, right, that at least tells you things aren't going to get a whole lot worse for you in terms of inventory and those market dynamics. If you're a seller, it means the market is still very much hot. This is such a minor reduction as to barely be noticeable. Now, if this is sort of the demand side, right, and this was the supply side back here, our 14-day new listings, this is our sort of absorption rate. And really, this is attempting to sort of reconcile those supplies and demands. And what I find sort of really kind of interesting here is just how close these under 1 million and 1 to 2 million lines are. Now, you guys have heard me say a bunch of times, right? And I use this very loosely that anything between 80 and 90% is a very strong seller's market. Anything between 90 and 100 is a hyper competitive seller's market. And anything over 100% is just nuts. Well, if you look at this, right here, what are we looking at, right? We are over that 90% threshold for our under 1 million, and we're not too far behind in our 1 to 2 million category. So the fact is, things have leveled off. There's kind of a sustainable feel to this. The problem is it's sustainable at a very, very high level. So, I can't emphasize this enough that if you think the market is going to sort of do this 180 change, there's really only a couple things, and I'll go screen share here for a second. When I think of what are the things that could seriously upset this market, right? Like, what are the things that could sort of change these dynamics? Well, number one, we could see an unexpected change in interest rates. And right now, I believe that would pretty much be a change upward would be the only unexpected change that we could see. The other change would be that we see an influx of new listings, right? And I think the problem is our market is so competitive. I think that there are a bunch of people. I have a little bit of a theory on our buyers here. And this theory that I have about a lot of buyers in the marketplace, I think there was a lot of buyer fatigue. I think there are buyers who have been looking and they've written a bunch of offers and none of them got accepted and they are kind of pulling back. I think if new inventory comes into the market, those buyers who might have been sitting on the sidelines, they're just going to swarm on that new inventory and we're not going to see it get that much easier, right? That's sort of my prediction of what might happen. So when I think of the things at this point that sort of could offer these sort of short-term market disruptions that would really change our supply and demand dynamic, honestly, there aren't a lot of things. Some people have been talking about that notion of the foreclosure moratorium. And there are a couple of reasons why I don't think that's going to make a very big deal in our market. Number one, I think that most of the people who own homes, especially in our hotter markets, are not people in the kind of lines of work with super high unemployment. The second thing is almost all of these sellers have a ton of equity in their house. They're not going to be distressed sales that'll go belly up. I just don't see that being a major factor. And then finally, biggest reason is the government is extending those foreclosure moratoriums. So, when you base it on that, right, my expectation is that we are going to see very little change in that inventory. The only thing that will make the inventory change, I think, is a lot of sellers seeing the prices and deciding they want to put their house in the market. But the problem that all those sellers have is even though they feel like they're going to get a great price for their house, the question is, where do I go? Where do I go after that? Now, if you are one of those sellers in that circumstance, there actually are a lot of options and ways you can configure things that are better for you. So if you'd like, definitely give us a call. However, as a market on a whole, I think that's kind of holding back some of this inventory. Okay, so back into our charts there after that little aside. These are absorption rates. Our market is still very hot. It's just stabilized out a bit. So if we go in here, hold on here. There we go. There's my pointer back. Now, if we looked at close prices, you're going to remember something I said last week, and this kind of falls under my predictions were correct. Last week, I said, remember, these are closed prices, and these reference properties that went into escrow 30 to 45 days ago. What was happening 30 to 45 days ago? Well, we were around Christmas time and the holidays. Not typically a great time, but look what has happened. My prediction was that the market had moved, and as soon as some of these moved price houses start to close, we're going to see upper prices. I think this is pretty close to a new peak for our luxury 75th percentile market. We're a little bit off our peak that we had for our median market, and we are very close to a new peak in our graphs if we are looking at our entry-level 25th percentile market. So, prices are definitely on the move. They are heading upward, and I don't see that momentum changing in the immediate future, meaning in the next 30 days. This is a chart we started doing this year in 2021, and I really like this chart because this kind of tells you, this is the most succinct way to describe what direction is the market moving. And this is our percent still active. So we look at all the listings that came on the market in the last 14 days, and we say, how many of those are still available? Well, in our under $1 million category, things have gotten slightly better for buyers, right? Like there's a little bit more available. And I think that is primarily a function that we're seeing that slight drop in buyer demand, and new listings is basically staying steady. And by doing that, it's improving our situation just a little bit. And if you look here, our $1 to $2 million market is actually closing ever so slightly. This is our list to close ratio, right? And so what we do is we take a look back and we say, of all the properties that closed in the last 7 days, on average, where were they versus the average list prices? Well, if we look at our under 1 million, we are pretty steady over 101%. This is sort of the new normal, that on average, homes in that under $1 million segment will be selling for over their list prices. But what was shocking to me was taking a look at this $1 to $2 million mark, and seeing this just shoot up to around 102%, a little bit shy there. We haven't seen that luxury market having such overbidding occurring. This, of course, could be the result of one particular sale throwing things off, but I mean that's a huge amount to move based on one sale. I think we are seeing that luxury market. People are coming back to that market in a way that maybe they weren't due to unrest or uncertainty, a month or two ago. Now we have our days on market for our new contracts. And again, this is another one of those graphs where you really look at the direction that it's pointing. And if this graph is pointing downward, it means the market is getting tougher. If this graph were pointing upward, it would mean the market is getting easier. And what you notice here is that in our under 1 million category, we dropped another day or two of days on market. I mean, we are now like 28 days. And again, the real surprise here is in this $1 to $2 million luxury market. Look at the dive this took, essentially week over week. That's pretty nuts to me, to see days on market drop so quickly in that luxury market. It's still longer than our under 1 million, which is to be expected, but to see big movements in this luxury space is kind of interesting to me. And we've actually seen a few data points, right, that have pointed to a tightening luxury market. Now, finally, we have our affordability of a median priced home relative to June 2018. And again, this is based on payments, not price. So if we look at that median priced home, the great news is we are still less expensive than 2018. I know I said a few episodes ago, I thought we were done with that we were finally reaching those 2018 prices, but the reality is we haven't. And I think this just really tells me that globally, yes, it's tough to buy a house right now. Yes, it's not always the most fun process. Yes, showings are difficult, et cetera, et cetera, et cetera. However, in the grand scheme of things, you are actually getting a great deal on a home because of those low interest rates. That's really enabling us to have these sort of lower than usual prices in terms of the payments that people are actually paying. Well, I hope you enjoyed this. As always, questions, comments, we love them. Do not forget to like, subscribe, hit that notification bell. You may also want to check out our website, which is www.domicilere.com. We have a blog on there. We have another post on cool, informative things. Also, we will be having another podcast episode drop in about a week. And do not forget to watch our entry-level home buyer market update that comes out on Fridays. We love you. Have a great week, everyone. And we hope to hear from you real soon.